Today we're digging into a pretty bold prediction, the 2026 software crash. Now this isn't just about some ups and downs in the market. No, this is about the complete death of a business model that has literally defined the tech world for over 15 years. Let's break down what's really going on here. So first things first, I want you to take a quick, honest look at your portfolio. Seriously. If you're heavily invested in those classic software as a service companies, you might be feeling a bit more like a charity donor than an investor right about now. And believe me, there's a very specific and kind of scary reason for that. And here's the key thing you have to get your head around. What we're seeing right now, it's not just some temporary dip. It's not a normal market cycle. This is a fundamental, structural break. AI isn't just some shiny new feature, it is performing a cold, hard autopsy on a business model we all thought was basically invincible.
All right, so let's scrub in and begin that autopsy. For the last, 15 years, the entire tech economy, and I mean all of it, has been built on one simple golden rule.
They called it the seat model. And the logic was just beautifully simple. And you know what? Wall Street absolutely fell in love with it because it was so predictable. It's easy. You hire a person, you have to buy them a license or a seat for whatever software they need to do their job. Simple as that.
And this just shows you how brilliantly linear it was, right? More employees meant more seats, which meant more annual recurring revenue. For investors, it was a beautiful straight line going up and to the right. But a brand new reality has just come along and completely shattered this logic. AI agents don't need chairs. They don't need desks. They don't have LinkedIn profiles to update, and they definitely don't need a Slack login. This one single idea is the reason the entire old model is collapsing as we speak. So, with that model basically dead on arrival, a completely new paradigm is rising from the ashes. We're moving from an era of software you use to a whole new era of software that does. And trust me, that one-word difference, it changes everything. Think of it like this, okay? The old software, that was a shovel. It was a useful tool for sure, but it still needed a human operator, you, to swing it and get any value out of it. The new software, that is the robot. It doesn't need an operator. It just digs the hole for you, all on its own. Now, this is not just some theory for a business school class. This shift is already causing real-world carnage among some of the biggest, most powerful names in technology. Let's look at the evidence. First up, Salesforce. I mean, come on, the absolute titan of the SaaS model. This is the company that practically wrote the playbook for the entire SaaS category. And their stock is getting hammered. And it's for a simple reason that cuts right to the heart of their business model. Their customers are starting to ask a really painful question. Why are we paying for 1,000 software seats for our human sales team when one AI agent can do the work of 50 of them? See the problem? When you don't need the human, you sure as hell don't need their software seat. Okay, next, let's look at another giant, Adobe. For decades, these guys built an unbelievable moat around creative professionals with tools like Photoshop and Premiere Pro. It was unbreachable.
Well, now that moat is evaporating right before our eyes. Why would a big marketing firm pay for a dozen expensive Creative Cloud subscriptions when a single prompt to an AI can generate, edit, and optimize all the video content they need? The entire value proposition is just collapsing.
But here's the fascinating part. The money isn't just disappearing from the tech sector. Oh no, it's just rotating. We're seeing this massive shift in value away from the UI layer, the pretty dashboards we all click on, and it's all flowing towards the compute layer, the raw, brute force power that actually makes AI possible. And this is so interesting because it lays out the two new camps so clearly. On one side, you've got the victims. They need human clicks. They charge you per seat, and they sell you a dashboard. But on the other side, you've got the enablers. They deliver a finished result. They charge you for that outcome, and they sell the underlying compute and data. That right there, that is the new dividing line in the entire tech industry.
And this all leads to a pricing model that is a complete and total nightmare for these legacy SaaS companies. It's called outcome-based pricing. You don't pay for the tool anymore, you pay for the job it actually completes. So if an AI agent closes a sales lead for you, the software company gets a cut. If it does nothing, the company gets nothing. This is the ultimate innovator's dilemma for giants like Salesforce, and they don't have an easy answer.
So, given all of this massive disruption, how do you even navigate it? Whether you're an investor or just someone trying to figure out where the world is headed, there are new rules you absolutely have to follow.
Here are 3 rules that are absolutely critical. First, stop trying to buy the dip on companies whose revenue depends on other companies hiring more humans. That link is officially broken. Second, follow the tokens. API token usage is the new key metric. It shows you the actual work being done by machines. And third, look for companies that have their own unique proprietary data. Because in this new world, if you own the data, the AI has to pay you to be smart.
This quote just perfectly captures the historic scale of what's happening. The old saying was, software is eating the world. Well, that's over. We've moved from software as a tool that helps humans consume information to AI as an agent that executes tasks for them. A whole new era.
So, if there's one single thing you take away from all of this, let it be this. We are witnessing the death of the dashboard. For 20 years, software has been a series of buttons and charts on a screen that you have to click. The future of software isn't an interface you look at. No, it's a simple, done notification on your phone telling you the job is already finished. Which leaves us with this final, pretty provocative question. The entire economic engine of the world is realigning itself around these autonomous agents. All the value is shifting from the human operator to the silicon that powers the operation. So the real question you have to ask yourself is, are you prepared to bet on silicon over humans?